What if I told you the difference between a losing trader and a consistently profitable one often comes down to waiting? Not some secret indicator, not a magic strategy, just the ability to sit on your hands when every part of you wants to jump in. Today, we're talking about patience, delayed gratification, and why most traders never master it. Patience isn't sexy. It doesn't get you hyped up like triple-digit returns or hidden chart hacks. But if you've been trading for more than a week, you've already realized that most of your worst decisions don't come from a lack of technical knowledge. They come from impatience. Think about it. You plan a trade, you set your levels, you know the setup you're waiting for, but then the market teases you. Price comes close to your entry point, but not quite. Instead of waiting, you chase it. Or worse, you bail on a perfectly good position because you couldn't wait for it to play out. And here's the kicker. It's not just a trading problem, it's a human problem. Our brains are hardwired for instant gratification. We evolved to grab food when we saw it, to take action fast, to avoid sitting still. But markets? They reward the exact opposite. They punish urgency and pay out to those who can delay gratification longer than the crowd. In this episode, we're going to dive deep into why patience is so rare, how delayed gratification gives you an edge, and what practical things you can do to build this muscle. We'll look at real-world trading scenarios where patience pays or costs you big. And by the end, I want you to see patience not as doing nothing, but as an active skill that separates amateurs from professionals. Before we continue, I want to thank the sponsor of today's video, Noesis. Noesis is a platform built specifically for traders who want to level up their consistency and mindset while avoiding mental pitfalls. It gives you tools like a daily mental check-in, a trade journal, and an emotion wheel to track your state while trading. On top of that, it includes structured playbooks, which are strategy checklists that you can go through before and after each trade, plus a playbook marketplace where you can explore proven strategies from other traders or share your own. If you're serious about developing the psychological edge that most traders ignore, Noesis is worth checking out. You can get started today at noesis.zone, link in the description. The psychology of wanting it now. Let's start with the science. You've probably heard of the marshmallow test. Back in the 1970s, psychologists gave kids a choice. Eat one marshmallow right now, or wait 15 minutes and get 2 marshmallows. Some kids waited, some didn't. Decades later, the kids who could wait tended to have better life outcomes, higher SAT scores, better jobs, stronger relationships. Now, imagine the trading version of that test. The market shows you a candle that looks almost like your setup. You can jump in now, take the 1 marshmallow, or wait for full confirmation and potentially get a better reward-to-risk ratio, the 2 marshmallows. Most traders, they grab the first marshmallow. Why? Because uncertainty is uncomfortable. Our brains hate not knowing. Waiting feels like missing out, like being left behind while the market moves without us. That fear of missing out, or FOMO, pushes us to act now, even if it's the wrong move. But here's the paradox. Markets constantly create opportunities. There's always another trade. The real scarce resource isn't setups. It's your ability to wait for the right ones. Real trading scenarios, where patience hurts or helps. Example 1. Chasing entries. Imagine you're watching Apple stock. You plan to buy at $170 with a stop at $165. Price comes down, but only touches $171 before bouncing. Your plan says, wait, stick to the entry. But your brain screams, it's going without me. So you buy at $171. Guess what happens? Price dips to $168 before climbing back up. You just took a loss that had nothing to do with your strategy, only your impatience. Example 2. Exiting too early. You short a stock at $100, aiming for $90. It drops to $95 fast. Your plan says, hold for $90. But you see those unrealized profits and think, what if it bounces? Better grab it now. You close at $95, pat yourself on the back, and then watch it free fall to $89 without you. Again, impatience cost you money. Example 3. The patient trader. Now, let's flip it. A patient trader sees their setup forming but doesn't rush in. They wait for confirmation. They endure the boring hours where nothing happens. And when the entry finally comes, they execute with calm confidence. That one good trade can outweigh 5 impulsive ones. The lesson? In trading, patience isn't passive. It's the discipline to stick with your edge while everyone else burns out chasing noise. Why patience is so hard for traders. Let's break down the real culprits. Dopamine addiction. Every click, every candle move, every tiny win triggers dopamine in your brain. It's the same chemical rush you get from scrolling TikTok or playing video games. Waiting feels boring because your brain wants that next dopamine hit now. Fear of missing out markets move fast. If you're not in a trade, you feel like you're falling behind. That FOMO pressure tricks you into lowering your standards just to be in the game. Illusion of control. Doing something, anything, feels like control. Waiting feels powerless. But in reality, patience is control. It's choosing not to hand your money over to randomness. Survival instincts. Back in prehistoric times, hesitation meant death. If you saw food or danger, you acted instantly. That wiring doesn't disappear just because we're sitting at a trading desk. Understanding these psychological forces is step 1. The next step? Building habits that make patience your default, not your struggle. How to build patience as a trading skill. Tip 1. Pre-plan your trades. Write down your entry, stop, and target before you even place the order. If the market doesn't meet your rules, you don't trade. This removes in-the-moment temptation. Tip 2. Use alerts, not eyes. Instead of staring at charts all day, set price alerts. Let technology do the waiting for you. This reduces emotional exhaustion and keeps you from overtrading. Tip 3. Reframe waiting as work. Waiting isn't doing nothing. It's executing discipline. Remind yourself, I'm not missing out, I'm preserving capital. The money you don't lose is as important as the money you make. Tip 4. Practice outside trading. Build delayed gratification muscles in everyday life. Try waiting a day before making online purchases. Take the stairs instead of the elevator. Small acts of patience spill over into trading. Tip 5. Keep a patience journal. After every trade, ask, did I follow my plan? Did I act too early or exit too soon? Over time, patterns emerge, and awareness is the first step to fixing impatience. The sponsor of this video can help you planning your trades and journaling. Remember to check Noesis.zone out. The edge of delayed gratification. Here's the big picture. If trading is a competition, your edge isn't just technical, it's psychological. Most traders can learn chart patterns. Most can run indicators. But very few can consistently delay gratification. Think of patience as a moat around your trading capital. While others burn theirs on half-baked setups, you're waiting, preserving, and striking at high-probability moments. That's the true edge, the discipline to do less, but better. So, what's the message here? Patience and delayed gratification aren't optional extras in trading. They're the foundation. Every impulsive trade, every early exit, every "I couldn't wait" moment chips away at your results. But every act of discipline builds confidence, protects your capital, and keeps you in the game long enough to win. Next time you feel that itch to act, pause and ask, am I trading my plan, or am I chasing a marshmallow? Remember, the market doesn't reward the fastest, it rewards the most patient. If this hit home, you already know what to do. Drop a comment sharing the last time impatience cost you a trade. I guarantee you're not alone. Hit like if this helped you see patience in a new light, and subscribe so you don't miss the next episode in our Trading Psychology Pitfalls series. In the next one, we'll tackle overconfidence, the silent killer of trading accounts. Until then, remember, in trading, sometimes the hardest move is no move at all.